afternoon. Hope everybody's gearing up for a nice 4th of July weekend coming up. The Fed has made it very clear this week, yet again, that they are going to hike. But what we've seen this week is stock and bond markets seem to be reacting very differently to the news. So we're going to be talking a lot about that today. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, data, trends we're watching, and weed out a little bit of the noise along the way. Yet again, the Fed is back in focus. There was a panel in Portugal that he was a part of with all the central bankers. So we are going to spend some time on that. But before I get into that, I do want to touch on a couple pieces that came out prior to these panel discussions. Starting with new home sales. So new home sales actually jumped like crazy, up to 763,000. So we saw a big spike in new home sales. So we actually saw the markets react quite a bit to this on some confidence that that the economy is starting to maybe improve. Although, outside of that one data point, I don't know if there's a lot to point to for that, but nonetheless, saw the markets react to that. And we also saw consumer confidence rise last week as well. So good to see those things, but yet again, the Fed is back in focus, and we'll spend some time on that here. Basically, this week, there was a central banking conference in Portugal on Wednesday and Thursday, and the Fed had, shared some thoughts. They were on a panel on day one. Today, they had more of a solo, kind of time up on stage. And so this was, I think, really interesting, first off, because the panel part of it had central bankers across the world. And so they had like the Bank of Japan, they had Christine Lagarde over in Europe, they had, all these central bankers talking about their policy. And a lot of them are still continuing to hike and said very clearly, we are continuing to hike. The Fed has been one that has backpedaled a little bit. Again, I think last conversation, it was pretty clear they were going to hike, assuming that there was no, very, very significant surprises in inflation. But more importantly, what came out of this week's panel event on Tuesday was that the Fed made it very, very clear that they are going to continue to hike. Now, again, there could be a surprise interest or inflation rate number that changes this, but outside of a huge surprise, I think that the Fed's tone was very clear that they're going to hike. He said that they don't expect to hit 2% inflation rate until 2025, which obviously is their target for those who tune in weekly. And so he shared that there's a long ways to go before easing on any policy. On top of that, today, on Thursday, when he had kind of jumped into more of a solo conversation here, he had shared that or suggested that there could very easily be 2 meetings in a row of hikes. So this kind of ties back to what we've been talking about over the last couple of weeks here with the Fed meeting recently. The reality is all Fed members showed that they expect 2 more hikes this year in 2023, yet we didn't hike. And the Fed was very clear they're going to, and markets kind of seem to shrug it off. But what I found really interesting over these last 2 days with these Fed comments is how different the stock market and the bond market has reacted to this tone. The stock market's basically shrugged it off. In fact, slightly up, let's call it. But really, the stock market's kind of just, gone along the same theme of maybe they don't believe the Fed. I don't know, but really shrugged it off, and in fact, slightly up, if anything. The bond market, on the other hand, has reacted significantly to this. We've got the 10-year today up, I think, a little over 3.8. And so again, what that means is that the bond market is saying that they believe the Fed is going to hike, and they're pricing in higher rates as a result of that, right? So it's been very interesting to see that. And for those who do tune in, that as interest rates rise, bond prices fall. So there's been a little bit of volatility in the bond market here as well. But what I find most interesting is just the complete split and how these two markets are reacting to these numbers. I would not fully agree with this saying, but there is a saying out there that the bond market is the smart money, the stock market is the dumb money. Again, I wouldn't fully commit to that myself. But I do think that in this instance, it's very interesting to see how the stock market is saying, we don't believe you, we don't believe you, and finding optimism wherever they can, whereas the bond market is saying this is going to be a little bit more of a challenge than maybe we had expected. And so there, we're seeing rates rise there, and also, on the longer term, meaning that they also don't expect the Fed to decrease rates for possibly some time. So very, very interesting to see this. I promise you that I am getting a little tired of talking about the Fed myself, but it is what's driving things. And so we want to make sure to share this. And this week's panel, and then press conference here today have been very important and reiterated that he and they do plan to hike. So we will see. Still, obviously, a lot could change over the next few weeks here, but it certainly looks like all signs point to a hike in the July meeting, unless there's a big surprise on inflation, which, by the way, we get some data tomorrow. So we'll leave it there for now. To switch gears back to some of the more data-driven side of things, we also have GDP revisions that came out today at 2%, and then initial jobless claims came out, and actually the number dropped a little bit from last week, so that was good to see. But we're seeing strong labor market yet again, in addition to or just ahead of the big news coming. So coming up next week, we will be covering the income and spending data that comes out tomorrow, but more importantly, the PCE or inflation numbers that come out tomorrow as well. And all of that is ahead of the big, weekend here. So 4th of July is on Tuesday this week, or next week, excuse me. Markets will be closed on Tuesday, but also Monday being ahead of the holiday, the markets actually have a bit of a half day. So a lot to unpack here, heading into a half day of trading on Monday and then a holiday on Tuesday. But we will be right back here next Thursday to share with you what came out of that inflation data, which again, unless it's a big surprise, certainly could kind of reiterate this point yet again. The question of the week this week is actually a really good one. And I think it stems from the brunch with Brandon that we did a couple weekends ago, where we talked a little bit about our take on the Fed and more directly what we got out of that press conference and what we had expected. And again, to kind of summarize, we expect that the Fed will hike. And again, I think all this most recent rhetoric certainly backs that up. But the question is a good one. It says, okay, so if the Fed is set on hiking another 2 times this year, why didn't they do it in this most recent meeting? Right? Why not take the opportunity to continue that, deal with the inflation that they keep talking about, and kind of put this thing to rest? Well, again, I think this is a very good question, and quite honestly, I don't think I have a very good answer, but I did want to address it because it's such a good question that came up and something I've been trying to figure out as well. The reality is that my opinion is that the reason that the Fed did not hike was because they had voiced possibility of not doing so. And although the Fed is not supposed to care about what the markets think or how they react, it has been very clear over the last 2 years or so that is important to them, and they will never admit it. But at the end of the day, they seem to be more concerned about the market volatility with their decision than maybe doing the right thing at the right time. And so I think that's what we saw. I think that the Fed, up until that June meeting, had suggested that they were not going to hike. And so because of that, they didn't hike, even though they probably should have. So now they're going to have to play a little catch up. Again, the Fed shared just today that they may even do 2 hikes in the next 2 meetings. We will see through that. There's a lot between the next 2 meetings, but nonetheless, that's kind of my take on why they didn't hike this month. Maybe give them a little time to breathe as well and just digest an extra month of data. But assuming again there's no big surprises, I think we can anticipate that it's very likely we see a hike in this July meeting. Thank you so much for that question. It was really good and a great kind of tie-in from our Fed conversation a couple weeks ago there. So thanks for sending that in. I hope everybody has a great 4th of July coming up here. I'll be celebrating over the weekend, but some I'm sure are taking a longer weekend and enjoying. So enjoy the holiday. We will see you next Thursday at 3 to break down the most recent inflation data and tie this all kind of full circle. So have a great upcoming weekend. We'll see you next Thursday.